What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and we're going to be going over the most anticipating earning releases for next week. Tons of companies are reporting earnings, most specifically the meme stocks. A ton of meme stocks right here. And I've highlighted quite a few of them in red that are kind of memey. And then I've also highlighted some of the blue ones, which are going to be some pretty solid quote unquote companies that are reporting earnings as well. So red is going to be a little bit more risky, a little more volatile, while blue is going to be a little bit safer because you have stuff like Disney, eBay, Coinbase, Unity, Airbnb, Embraer, some solid companies, whereas the red ones are going to be AMC, Neo, Clover Health Investments, Wish, SoFi. Yeah, a lot of the risky meme stocks, hype stocks. So that's what we're going to be looking at. So tons of earnings and tons of potential. A lot of people think that, hey, earnings, you can lose a lot of money. You shouldn't play earnings. But earnings season is my favorite time to play these stocks, especially options, because there's a lot of opportunities. And rather than straight out buying calls and buying puts, that's pretty risky. It's better to do strategies where theta as well as implied volatility is in your favor. Which includes credit spreads and selling cash secured puts, as well as covered calls if you already own shares. So those strategies are what you're going to want to utilize for these stocks during earnings week. Now, if you did happen to want to play calls or puts, you want to do that a few weeks up to a month or so in advance, because implied volatility does run up the closer it is to the earnings release. And higher implied volatility means higher premiums on the contract. So the later you get in, the more premium you're going to have to pay per contract. And that is why it's such a great opportunity to sell options and to actually be the put writers, the call writers, or do some put credit spreads on these stocks, because you're going to be collecting some really great premium due to the higher implied volatility. And after the earnings release, you can make some really quick cash, especially since the implied volatility gets crushed after earnings release, which means that the premiums on these contracts are going to be lowered as well, which is really good when you're selling options. So before we get started, take a look at the link in the description for our day trades for our Discord server. As we can see here, Eva Panda, one of our analysts, had 100% win rate, with the biggest winner being Coinbase calls, up 88%, almost doubling your money. Pretty great stuff. So that's that. So there's 5 particular stocks this week for earnings that I am watching, and I am planning on doing some favorable strategies, which include selling cash secured puts or put credit spreads. I have a bigger account. I have about $21,000 buying power sitting in my account, so I'm going to be selling some cash secured puts on these 5 companies. Some very far out of the money puts, because I don't want to risk the stock tanking and losing a lot of money. So first one, of course, is going to be the beloved AMC. So AMC is sitting around $33. I am holding quite a bit of shares of AMC, but I am planning on selling some cash secured puts expiring probably August 20th, just 2 weeks out. Maybe August 13th. Let's take a look at the premiums. Yeah, I'm going to do an August 20th expiration date, which is going to be 2 weeks out. We can collect some really nice premium for selling some really far out of the money cash secured puts. So something I'm eyeballing would be like a $25 or $24 strike, and selling these contracts would collect you $102 or $80 respectively for selling these puts. As you can see, our chance of profit is going to be around $79 or 79% or 81%, depending what strike you choose. So that's really good for us, and that's sort of the chance of profit area we're looking for, around the 80% mark. So I would be looking to sell one of these contracts and collect some nice premium for next week. Next stock is going to be NIO. sitting at just under $44. It's had a really nice consolidation period, and it should report some really nice earnings, especially with the easing of the Chinese government on these stocks, these companies. So again, probably going to do an August 20th expiration date. And these stocks are perfect for people with small accounts. They're not very expensive. NEO being around $44, you're going to have to put down a collateral of just around $4,400. But of course, you could always sell some put credit spreads. For example, if you only have like a few $100s, you could sell the $25 strike and then buy the $24 strike. As you can see, we'll receive a total credit of $22, and we only have to put down, let's show you right here, a collateral of $100. So we're turning some really nice profit here. It's about a 22% return in just 2 weeks for this put credit spread, which is going to be pretty nice for people with smaller accounts, only have a few $100 in their account. This would be what you want to do. And these strategies would apply to any of these stocks we're talking about right now. So NIO, we're going to be selling some puts. Let's go down to around 78%. I'd be looking at either this $39 strike or the 39.5, and we're going to be collecting $85 of premium or $74 of premium respectively. Our goal with selling these cash secured puts is to close them out the very next day due to the IV crush. Of course, it is going to be, you are going to lose money only if the puts, the underlying stock, which would be NEO or AMC, tanks completely. So we don't really anticipate that, but there's always that risk factor. So next stock is going to be Palantir. This stock has been consolidating this past month, so it is looking for quite a volatile earnings week. So we're going to be selling some options on Palantir as well. I'm going to be going to the August 20th expiration date as well, selling cash secured puts. This one's a little bit cheaper stock, so people can, with smaller accounts, can easily sell a contract or two. And I'm going to be looking at this $20 strike. I think that's a good price point to potentially buy more AMC or Palantir shares, because remember, if at expiration the stock goes below your strike price, it's going to exercise and you have to buy 100 shares at $20 each. So that's if you want to hold it until expiration. So I'll be selling one of these, $20 strike, collecting $37 of premium. And you may not think that it's a lot of premium you're collecting, but it does add up over time. Sell 2 of these contracts for $4,000 collateral. You'll receive roughly around $74 of premium, which isn't that bad. Next stock is going to be Wish Context Logic. It's down quite a bit from its all-time highs. They do have a lot of monthly users, so I do think that their earnings isn't going to be terrible. They are actually having some pretty high estimates for this quarter, so we might see some pretty good things. It's been consolidating lately as well, and it's been down pretty heavily this past few weeks, past few months. So what we're going to be doing is we're going to be once again selling some cash secured puts. This is a pretty cheap stock, so you could sell multiple of these contracts. We're going to be doing either the $9 strike. Let's do the 8.5. You receive $23 of premium, which is going to be pretty good. And the best thing about it is the all-time lows for Wish stock is around 8.5. So you're literally buying the all-time lows if it does happen to drop below that strike price, which is pretty good. This is a pretty cheap stock. If you have around $4,000 in your account, you could do something like 5 contracts, sell it for $115 of premium for a collateral of $4,000. That's not that bad. So that's something we'll be looking at. Chance of profit is around 78%. So there's a really high chance that you will win on this trade. And last but not least is going to be Tattooed Chef. We're pretty bullish on this in the long term. As we can see, it has this nice pennant formation. It's consolidating for sure, and it's just looking for that next breakout. I'm holding a leap call option for actually, this is not a leap. This is a gamble, a lottery ticket. About 10 of these contracts expires August 20th, which is in 2 weeks. Just a little earnings play. that I'm going to be doing. So that's what I'm playing on. It's kind of a gamble. It's okay if I lose all my money on that. I didn't put too much money in. But if you want to play options, definitely don't do that. It's kind of risky. Only play calls, buying calls and buying puts if you have some throwaway cash, which I do. So I'm going to be playing that as well. But the safer option would be to sell some cash secured puts on this strategy. Once again, a $20 strike isn't that bad. Our break even would be $19.25, which is a nice price point to get into this stock, especially for the long term. And you receive $75 of credit for that cash secured put, as we can see here. And this is going to have just under 70% chance of profit. And the goal with this would be to close it out the very next day after they report earnings due to the IV crash. So that's going to be the strategy with TTCF. That's about it for this video. Tons of earnings this week. Lots of great strategies, whether you're going to be selling some cash secured puts or some put credit spreads on these stocks. So that's the best way to play earnings, is to sell options to collect a nice premium and just let time decay, and as well as the IV crush eat away at the contracts so you can make that nice tendies. That's about it. Thanks for watching.